All right, what's going on, boys? How you doing? Hamza, Gagan, Nils, Ram, Ricky, and Andrew. How you guys doing? Hopefully you guys had a good day. Pretty decent day. I wasn't planning on doing much today. I told you guys I wasn't planning on playing this rip. I'm just gonna get out of my shorts and reload them, hopefully much higher. The reason for that is my seasonal chart. I've been sending you the seasonal chart. The macro's been playing out to the T on that chart, so I'm gonna keep following that chart. I don't care what whoever says. You can say whatever the hell you want. I'm not listening. I'm just following my seasonal chart. And basically, it told me that we're due for a little 1, 2, maybe 3 day rally here. And as you know, these short squeeze rallies are vicious. So I didn't want to sit through the pain. Instead, I took off my puts for October. As you guys know, the UMD, the UNP, AMD, and JPM puts I sold this morning. Obviously, I could have held on another 2 hours and got even more profits, but again, it's very hard timing the market, guys. I took off JPM on this first 10-minute candle, I believe, right here. Obviously, I could have caught a lot more, but if I was being greedy, why would I sell here, right? I would have thought it would have went lower. We got a big ass bounce. Those puts went lower than they were yesterday because of time value. What's up, Carlos? How you doing? So we're just going to go over a couple of macro things right now. September 1st is out of the way. Monthly inflows are done. We called the exact bottom this morning at 39.05 on SPX. We got down to 39.0474. If you want to be technical about it, we did undercut my level by 26 cents. This level was sent out before the market even opened this morning, by the way. And then afterwards, I told you guys we're probably going to fill that gap from yesterday, which was done. Not only did we fill the gap, we closed above the gap, which is showing short-term bullish signals. The reason being, if you're on a 10-minute chart, obviously we're a little extended to the upside. Zoom out a little bit, guys. So we're going to go to 8 hour first. 8 hour chart, look at where the RSI is, look where the stochastics are. Every time stochastics are down here, usually we get a pretty decent sized bounce, as you guys see here. As you guys see here. As you guys see here. 3 or 4 days straight up, and almost every single time you get a little 2, 3, 4 day bounce maybe. And if you zoom in even more to the 4 hour, you'll understand what I'm talking about. I have taught you guys this on the 4 hour chart so many times. The RSI on the 4 hour on indexes is very important. It very rarely stays oversold. So we have the 4 hour here. Obviously, it got oversold right here on June 13th. This is why it's hard to time bottoms, guys. June 13th would have been where I exited my puts. I don't remember what positions I had at the time, but if I did have puts through this drop, June 13th would have been my exit because the 4 hour got well oversold. If you guys look at the chart closely, let's actually just look at it closely since I'm probably not going to do post market tomorrow. But you guys see here, 4 hour RSI way oversold. Did we keep going down? Yes. The RSI stayed oversold for a period of time. So 4 hour charts, this would be 2 days that we kept going down after we got oversold, 2 days. But what does that really mean? The low of the day when we sold was 37.50, for example, and 2 days later the low was 37.05. So we got 45 points more down in 2 days, but that's so risky to hold your puts through that because something like this can happen where we go up 40 points and then the next 4 hours we go up another 45 points. So we erased both days of declines in 1 day of short squeeze. Then obviously we did gap down lower. But again, you guys get what I mean. When the 4 hour chart is oversold, generally you want to be at least taking profits on your puts because a short squeeze rally is more than likely around the corner. You can go back in history and look at it. Here's a 4 hour chart here. You got the RSI beat up. Look at the size of this squeeze. Same thing here. 4 hour chart beat up, big squeeze. So just go look in history if you don't believe me. 4 hour chart, oversold RSI, usually you get a nice little squeeze out of it. That's what I'm expecting right now. I did not expect again, the downturns go farther than you expect. So if you look right here, we were oversold on the 4 hour for time now. There's 1, 2, 3, 4 candles. So almost 2 days straight of oversold action based on the 4 hour candles. We finally got that relief, and even to get out of oversold territory, we're gonna need another green 4 hour candle just to get out of this oversold, guys. What's up, G Money? How you doing? But that's basically my thing. So this morning, you guys seen me. I was exiting my AMD, I was exiting my UNP, I was exiting my JPM. I have October 21st. I could have held through this relief bounce, tried to time my entry back in to put back in my scaled puts, the ones I sold for profits. But instead, I decided I don't know how far this bounce is going to go. My target for right now is around 4060 to 4137 area. If I get a bounce to there, I will start putting those October 21st puts back on, and I'll call it out. But that's my target for right now. It's matching up with the 4 hours chart. It's matching up with the daily chart as well here. And I want around 4060 to around 4137. Even if I'm wrong, if I'm early by a day or two, which I usually am, those puts are for October 21st. So not only do we have time on them, they don't lose much value in these short squeeze days, and we'll see what happens. If you look just at a daily candle on SPX, that's a very good reversal candle right there. Straight dump, straight into 4 hour oversold territories, straight into 1 hour oversold territories, straight into everything was oversold basically. Look at the 30 minute. 30 minute was way down here. So we were looking for a bounce all day. Did I get out of my puts an hour or two early? Yes, I did. Was it safer to do it that way? Yes, it was. Will I continue to do that? Yes, I will. And right now I'm looking for a bounce. Hopefully the market gods will bless us and they will bounce us to around 4060 to 4137 area so I can reload those October puts. Other than that, end of the first of the month buying, you guys seen a huge, I wasn't at the screen, I was on the treadmill at the time, but there was a huge golden sweep on Apple calls for September 16th, I believe. That was the signal that beginning of month inflows are coming in. I believe it was around 1 o'clock. And as you see here, Apple was on a straight trend up for the rest of the day. Overall, on the daily chart for Apple now, we did hold the 50-day moving average. Now the next big obstacle becomes that 200-day. If we get back over 161.06, the 200-day algos will buy this back up. JPM, again, I sold in the morning. I missed about 2 hours of downtrend. I could have got a lot more on my puts. I can't time the market perfectly as much as I try. But I think it was a good idea to get out of the puts in the morning. And for now, the daily is just complete chop zone. As long as we're under 119 and 116, it's a very bearish chart. If we get above 119 and 116, then you can start to flip bullish for a test of that 200-day moving average, which is up at 135. But until those, if we get back up to 119, I will be shorting JPM again with the same size I did the first time. I know I said I would just put my profits back into those October puts, but this time I'm going to go a little bit heavier on JPM because I'm very confident in that level. UNP, same story. Not even much of a bounce at the end of the day there. I sold in the first 10 minutes. As you guys see here, it just kind of grinded up and sideways all day. If you look at the daily chart, it played out perfectly. We went straight from my entry from the break of the 200 days straight to my exit at 222 was the plan. We got all the way down to 217, which is also the 50-day moving average, held it today. So now for UNP, if it gets back over 227, I want to take it back on a ride short at 232, which is the next fib up. Other than that, Netflix yesterday, Jay Fizzle had the perfect play. He had 220 puts right from 232. I guess he didn't trigger them or something. They went in the money this morning. The first 10-minute candle put you in the money. Those are probably going to be up 200, 300%. I'm sorry, Jay Fizzle, for mentioning them again. But literally, it was just fib to fib. Like, I had another set of fibs on here I had to delete yesterday. You guys seen it. It was at 232.70, I believe, or something like that, the second fib. And we got up there yesterday. So that was an easy play. Netflix definitely showed strength there at the end of the day. That means maybe there's more shorts in there. Maybe there's more first of the month buying in Netflix. I'm not too sure. One play I did take today was BBBY. I was generally waiting for 790. I said it this morning. I'm watching meme stocks. What did I just click? Okay, never mind. I was waiting for 790, which was the 0.382 fib right here. It wasn't giving it. It wasn't giving it. I was going to wait patiently, but then I seen that golden sweep on calls. There was someone that bought over $1 million in BBBY, Bed Bath & Beyond calls for September 16th, the 10.5 calls. I followed that guy in simply because there's gaps to the upside. There's one gap to the downside here. The downside is 8.29, which would be down about 30 cents today. And the upper gaps, we have all the way to 11.52 and then 16 and then 22.50. So the risk reward is there for me. We can either drop 30 cents, fill that gap before we start heading up, or we can just head for these upper gaps right away. Plus that golden sweep. Someone's putting $1 million into Bed Bath & Beyond. Is probably more money than they make in a month as a business. So I figured the risk reward is there. I think the market is going to bounce. If it does bounce, it's going to be based on a short squeeze. What's shorted more than these meme stocks? Nothing. So BBBY still short interest of 52%. I'm still in, and I will be holding this one and seeing where it goes. I have a position where if it goes against me, it won't hurt me that much. If it goes for me, it's going to help a lot. So the risk reward is there for me. Another one to keep an eye on is this BGF. I can't even spell after 4 o'clock. BGFV. Yash brought me onto this one. Actually, I looked into the short interest. It's also very highly shorted. There was a dividend ex-dividend or something today, so I didn't want to play with this one. I took BBBY based on that golden sweep as well. And other than that, just keep an eye on this one as well. Another one that I took today, I actually followed sweeps with Rivian. There was a very weird order on NVIDIA puts yesterday morning. Someone loaded 2 layers of NVIDIA puts, and then they broke that news after hours that China was banned. They can't sell chips to China, basically. A very, very similar order came in on Rivian calls today, so I'm thinking maybe it's the same insider trader. Maybe he knows something. Maybe some Rivian news is going to come soon. So I followed a couple of the 31s. It's risk free. They're in the money calls. They're 2 weeks out. Even if it opens down tomorrow, I won't lose that much money since they're in the money. But I am expecting news on Rivian overnight. AMD was the absolute best trade for me for those October puts. I bought around 96 here on this little pop here. And we sold, I actually sold this morning, I think in the 83s, right? I sold in the 8150s was my sell this morning on the 75. Obviously, they went all the way down into 78s, which is insane. We caught this whole move. We called it long 7250. Everything was live. We called a bunch of members took equity 7250. I said I was scaling out at 100. Got out. Then we caught the short back from 96 all the way down to 78 today. And I have no doubt in my mind after this bounce, technically, if we bounce around 86, 87 on AMD, I'm going to get right back into those October puts. Maybe the 70 strike this time, maybe lower. But same plan, just waiting for bounces. I'm not going to play too many calls, even if we do get 2-3 days upside. I'm going to play these little weird, I'm going to follow the flow. I'm going to play ES futures instead. No premium burn there for me, and it's just much easier to play the upside, especially on these bounces. Other than that, another reason is obviously when the market goes up on a short squeeze, VIX is going to go down. Your contracts on your calls are going to lose value. You're basically swimming upstream at that point. So other than that, I'm focused on ES long futures here. I'm going to play a couple of these meme stocks, these highly shorted stocks, and just wait a couple of days to get right back into those October puts because I do expect a lot of volatility this month and next month. Other than that, if you guys agree, let me know in the comments. If you don't agree, let me know in the comments. Thank you guys for attending, and I will see you tomorrow.